Hey guys, what's going on? Inaugural YouTube live session here. Kind of excited about it, guys. I've been going live on Facebook the whole time I've been running the channel since last April. Can't believe it's coming up on a year. And by stroke of luck, Facebook just out of nowhere shut down my ability to go live, just saying I hadn't used the page a lot or something. It's actually the most active Facebook page I have. And that forced me to look for other solutions. So here I am on YouTube, where I prefer to be, which I wasn't even sure I could go live here. So super happy to be going live on YouTube versus Facebook, guys, and then having to repost those Facebook videos here on the YouTube channel. So a lot of stuff going on, guys. I'm way behind on getting some content up about just the stuff that I'm keeping an eye on, that I'm seeing, that I'm tracking, that I'm just wanting to throw out there and see what you guys think about. And I don't even know where to begin, guys. I mean, the move in gold, the deteriorating monetary situation for the United States, the commercial real estate stuff that I've been seeing, some of the articles that have popped up on my radar. So we'll just start somewhere. And the first thing that I'll mention is the move, and a lot of these things obviously are tied together, guys, but the movement in gold. I'm just going to be straight up with you guys. I bought 5 ounces back in September 2023, literally like the week before the Israel-Palestine conflict kicked off. So I bought it. The gold portion, because I got some silver too, but the gold portion of the portfolio was somewhere in the mid 9,000s. And checking the account today, it's now moved well into the 12,000s. Gold spot price when I first started looking in September 2023 was in the 1800s, probably around 1850 to 75, somewhere in there. It's now priced at 2,300, 52-week high, basically gone up like 30+% from the fall to the spring. I mean, it's unbelievable, guys. And I think there's something really meaningful about gold making that kind of move. Silver, the last couple days, I think silver's gone up like 2 or 3% per day, or some crazy number like that. I just have a tiny little bit of silver in the portfolio, that I've, just a tiny little bit that I can't even remember the amount. But anyway, so silver making new highs, Bitcoin making new highs. It's just really incredible, guys. And, I think, the commentary I'm seeing out there, the guys I follow, the guys I pay attention to, the commentary is that, the world is catching on. They're catching on to the fact the United States has no option other than to just endlessly print money. We're never going to get out of this mess. We're never going to pay off these debts. The interest rates are going to keep going up. I've talked in other videos, guys, about how I see a second wave of inflation on its way, much worse than what we dealt with in 2022. When things peaked at 9%. So it's just everybody's catching on. So, commodity prices going up, gold going up, silver going up, Bitcoin going up, copper, I see a lot of talk about copper, just sort of entering this sort of commodity super cycle, whatever that means. But at the same time, real demand for copper because of AI, like NVIDIA, I think announcing that it was going to, put all these chips into some data centers that were then going to need a shit ton of copper or whatever. So this is really fascinating stuff, guys. What's at work here with regard to things like gold, etc. So keeping a close eye on that. More to follow on that. Really kind of angsty right now about whether I should have bought more or should try to squeeze out 1 or 2 more ounces of gold to add to the portfolio at this point. But yeah, just not certain how that's going to play out. Let's see what else. So posted on the Facebook feed, guys. It's usually where I'll post articles. It's real quick for me to do that. I don't keep X open all day, but I do have a Facebook tab I can kind of pop into really easily. So usually if I've talked about an article that I'm reading or I've read or you should read, you can find it in the Facebook feed. So I posted in there back to back, and I don't remember exactly what the sources were, like what the websites were where I saw these articles, but you guys will see them right at the top of the feed pretty much from today. And they both talk about commercial real estate. One of them talks about $900 billion of commercial real estate loans maturing this year, just 2024 alone. And then the other one was a little bit more expansive. It went all the way up to 2026, I think, and was talking about how there's like $2 trillion total between now and 2026, or some larger number than 900 billion. Let's put it that way. So, so I haven't read either article, guys. I really can't wait to dig into them, but I just wanted to let you guys know they're up there, and it's just, you know, like, it's just added drumbeat to what's already been going on out there as far as commercial real estate coming under tremendous stress, and reaching a point where, you know, it's going to collapse. There's going to be some real shock waves that go through the system. So, anyway, so those are up there. As soon as I read those, guys, I will be back with more content about them. I actually really like to make a shared screen type of video where I can go through the article and kind of share my thoughts, you know, with it as a backdrop that you guys can kind of follow along with. So we got that going on. Bought another 60 plus shares of AT&T. I actually had a very uneven number of shares of AT&T because it had reinvested some dividends. So I had like a fraction of some shares or whatever. So I bought like 62 plus shares, rounding off to about 400. Yeah, 400 shares exactly in AT&T. I intend to go to 500 by the end of the week, looking for a little dip on AT&T. But I want to go to 500 shares because the ex-dividend date is April 9th. So as long as I've got my 500 shares by April 9th, I'll get that 27-cent per share dividend paid out sometime in May. So really liking that. I think it's like 6+% dividend that AT&T has going for it. So that was a move I made. Just want to let you guys know about that. Let's see what else. My book, The Income Factory, came in the mail. Ben Bavaria. Pretty sure I posted that video to the Facebook feed maybe a week or two ago, guys. But if you don't see it, or if you're trying to find it and you can't find it, just drop a comment in here. I'll get the link back up somewhere. I'll post it somewhere and let you guys know where it is. Basically, bought the book after seeing about half of a YouTube video that I've got to finish, where Bavaria was talking to, I forget the host of the YouTube channel, about how he's constructed a portfolio that he calls an income factory, where he focuses on lesser known, although it's not really justifiable as to why they're lesser known. I think it's just kind of keeping people like you and me away from these types of things. But like some of the more obscure things that you might come across in terms of like how to get income, like senior loans, covered call funds, you know, high dividend utility stocks. Those aren't as obscure, obviously. Junk bonds, but junk bond funds instead of just junk bonds. Things like that produce like 8, 9, 10, 11% returns, and just plowing those returns back into the portfolio. Just a really fascinating kind of long game option that I'm really intrigued by, and that I really want to test out. So anyway, so that's something that I'm really excited to dig into. I'm gonna start that book tomorrow. We'll share observations as I go along. If again, I think I shared the YouTube video with you guys. If you don't see it, let me know. I'll get it out to you. But definitely a super fascinating alternative look at generating lower risk returns that are much higher, more than likely, than if you, let's say, picked your own stocks or something like that. So there's that going on. Let's see, we talked about CRE, we talked about gold, we talked about income factory, talked about AT&T. So another item, guys, you know, I've really been touting this 3-pillared hypothesis I have about how things are going to collapse. Pillar 1, second wave of inflation in the second half of the 2020s. Pillar 2, commercial real estate collapse that's magnified by derivative investment failures. And Pillar 3, on the other side of the decade, in the early 2030s, the collapse of, or bankruptcy of, Social Security, Medicare, prompting, you know, new waves of inflation and money printing, etc. So I think when you look at those three things happening between the mid 2020s and the mid 2030s, that's where I think we're going to see things really blow the lid off. But I think, you know, from the inflation standpoint, been really trying to research, okay, the last time we had a massive paroxysm of inflation in the United States was the late 70s, and trying to pull the thread on why we had it. Where did it come from? Now, I know, you know, the party line is, you know, we had big oil embargoes by OPEC, and, you know, people anticipated inflation, so there's more inflation. Just a lot of BS type stuff like that just ignores underlying causes, like the Vietnam War, the Great Society, a lot of social program type expenditures that were going on in the 60s and 70s, Kennedy, Johnson, Nixon. Okay, so that's really what I was kind of hunting for. And, you know, I'll be honest with you guys, I used ChatGPT. I did some Google searches. I was, you know, checking a bunch of different websites on that. And, you know, honestly, like, it's exactly what I thought, that this was something that a lot of people blamed on surface level type indicators like the oil embargoes, but that with analysis, retrospective analysis, experts and analysts, economists, whatever you want to call them, have more correctly determined that inflation came from basically came from those underlying monetary expansionary policies of social programs, Vietnam War, things like that. So I'm really trying to use that research to prove out the hypothesis that I have, that all the inflation hasn't showed up yet because the inflation from 2020, in 4 years ago in the pandemic, that hasn't come yet. Okay, that inflation, and of course, we're always inflating, so everything surrounding it in proximity to the year 2020, plus that huge spike in 2020, that and subsequent stimuli that came out after 2020, that inflation hasn't even arrived yet. And again, it seems odd to say that, but I think using this research as a backdrop, it's not odd. It takes a while for expansionary monetary policies to filter through the system, to pick in for lack of better words, to pick up speed, to pick up momentum and velocity, and then actually hit the economy and show up as higher prices, in the stores and stuff like that. So I posted that research, guys. I actually posted what ChatGPT sent me about that query that I put into it, and I also posted one of the websites that I read. I think it was Investopedia, and its analysis of the Great Inflation period. So check that out too, guys. That's something I'm going to be talking a lot about. I'm really going to be hammering away at this thesis because, if for nothing else, if I don't benefit that much from it monetarily, I'd like to be historically correct. So I'm really going to keep harping on that, and that research that I did today is really just scratching the surface. So anyway, guys, I'm going to wrap it up here. Super excited to be using the capability versus the Facebook Live capability that I previously employed. So check it out, guys. I probably will be live on here at least a couple times a week. Obviously like to do it from the car when I can do it. So if you guys are hanging out on YouTube, please come check out the live session, and would love to interact with you here and get questions, comments, feedback, things of that nature. So until then, guys, really appreciate you guys checking in, and we'll see you next time. Thanks.